A trailing stop in Forex trading is a dynamic stop-loss strategy that allows traders to lock in profits as a trade moves in their favor, while still allowing room for potential gains to accumulate. Unlike a traditional fixed stop-loss order, which remains at a fixed price level, a trailing stop adjusts automatically as the market price changes. For instance, let's consider a buy order that has entered a profitable phase. In this scenario, implementing a dynamic trailing stop proves advantageous. By adjusting the stop loss upward as the price climbs, the trailing stop effectively tracks the market's upward movement. This process persists until the price retraces and reaches the trailing stop, at which point the order is closed. Conversely, when encountering minor corrections during an uptrend, the order remains active, allowing for gains. However, should the trend experience a reversal and the correction evolves beyond a minor adjustment, the stop loss is triggered, leading to the order's closure. This strategy aims to secure profits during favorable movements while responding to potential trend shifts to manage risk. In a sell trade, the trailing stop loss tracks the downward price movement, continuously adjusting as the price descends. This process persists until a trend reversal occurs, causing the price to reach the trailing stop, triggering its activation.
Are you a trader? Aren't you profitable yet? Do you need a free consultation? Go to the Persists Forex Academy website. Select Consultant Appointment in the main menu and finally set up an appointment to talk with our experts.
We express our gratitude for your attention. Persists Forex Academy ensures weekly Forex and crypto analysis and forecast to keep you updated. Optimize your trading decisions with our daily Forex and crypto signals. Support us by liking, commenting, and subscribing to receive our profitable signals and insightful analysis.